I think there's a mixture of some longer term, very credit positive aspects for the industry, but offsetting that there's some shorter term negative aspects. So in terms of the longer term opportunities, obviously we've got ageing populations, which gives rise to a lot of opportunity, particularly for the life and savings type of services and products. But you've also got improved mortality and morbidity. So you've got people living longer and enjoying a better lifestyle, but also having to deal with some longer term health issues that emerge as a result of that increased mortality. So there's great opportunity there for providers of services that support that long-term retirement income and also health type products. But you've also got another key positive is the fact that many of the developed and mature economies are running economies that simply can't afford to support this ageing population. Insurers are definitely investing heavily in the digital space, and I think the big challenge for them is how is digital going to pan out? You've got an emerging market of younger policyholders that are very digitally aware. Young people today can only communicate via phone, it seems. And you then have changing buying patterns as a result of the digital opportunity. We've seen that in many markets across the world, that people are buying insurance on a day-by-day basis in some markets, particularly for some of the emerging markets in the Far East. So there's a very different need now for companies to how they price risk, how they offer their services. And insurance companies, I think, are investing heavily in the digital opportunity. But the question is, how is that going to pan out? Because that has implications on the distribution of products and has implications for actually the structure and nature of products. If people are becoming more short-term in their view as to what insurance provides for them, you need the products that match those demands. It's been a very interesting time. I think the low interest rate environment and the poor investment returns has forced many companies to focus very much on the technical skills and the underwriting results that they're providing and producing. And that's been, I think, a good lesson for the industry in terms of that return to that core skill. But it does put pressure on earnings. Having said that, though, we've lived through a period where major catastrophe events haven't occurred in any great numbers. So balance sheets generally are pretty strong. So there's still a very competitive marketplace out there. So you've got very much a greater focus now on expenses and a drive to create efficiencies. And I think that's driven some of the large mergers that we've seen in recent times. Companies thinking that there's no great investment opportunity, there's limited scope to underwrite at a significant profit. So you've got to force economies of scale through the industry. Solvency II has been a very long and protracted journey for the industry, and we're finally getting to the end of that, and we'll see the impact of Solvency II starting next year. I think what will take longer to play out is the impact that has on how companies manage themselves, their balance sheets, and particularly the product design, and how companies perhaps will move away from more capital-intensive products. You've also got, with Solvency II coming into effect, a little further down the line, you've got some reporting standard changes that are going to have further impacts. So IFRS 4 and IFRS 9 will impact how companies outside of the US report their balance sheets and recognise, ultimately through IFRS 15, how they recognise income. And that's going to be a big issue as well. And I think it's something that, because the timeline is a little further out, there hasn't yet been the same industry focus as there has been on Solvency II. But I think that's potentially going to be the next major long-term challenge for the industry.
We'd like to thank AM Best for their contribution to our program. If you'd like to see more of the First Monday series, visit the AM Best website.